Thanks for tuning into the Finance News Network. I'm Jessica Amir. Today I'm with Mayur Resources Managing Director Paul Mulder. Hi Paul, and welcome to the network.
Thanks for having me.
Thank you for coming. So for those who haven't heard of Mayur Resources, can you just give us a quick introduction?
Mayur Resources is a Papua New Guinea based portfolio of assets. Those assets are primarily surrounded around minerals, industrial minerals particularly, and also energy. And the reason why we've focused in on that area, as most people know, Papua New Guinea is a developing country, and based on it being a developing country, it has a need for industrial minerals for cement, lime and those sorts of things, but it also needs energy and it needs power.
So before we talk about your projects, just tell us about PNG. Is it supportive?
The Papua New Guinea government has been very, very supportive for our investment. Before we made the investment in PNG, we looked around at other jurisdictions such as Indonesia, South Africa, Myanmar, India, and Papua New Guinea came up trumps. It has a Westminster system, it has a very proactive government that has a strong focus on resources and energy in all of their plans for development. We've secured approvals and got through the development timeframe in a very fast period of time when you compare it to how long it takes, say, to develop a similar project in Australia.
Now to your projects, Paul, what can you tell us about mineral sands?
We have a very, very large area of mineral sands under tenure. Orocolo Bay is our flagship project. That project has been funded. We recently announced that we're in a joint venture arrangement with a Chinese company, and we'll jointly develop that. Now those mineral sands projects has 4 different products. It has a vanadium titanium magnetite for steel making. It has a dense medium separation for coal washing, which is a magnetite based product, zircon, and also a high grade silica sand for construction materials. And
what about cement and lime?
Cement and lime has been our most recent project that we've announced. It's circa valued around 500 million Australian dollars in NPV terms. The key thing for Papua New Guinea here, which most people won't know, is Papua New Guinea does not have one cement plant. So if you think about the whole country, to build the entire country, it's importing its cement. And for its quicklime, most of its quicklime's coming from Thailand. So when you've got all the resources in country, so close to an energy source, you have competitive labour, and all of the other associated minerals to make cement is essentially all on the one tenement right on the coast next to deep water. That's the consist of a tier 1 really valuable project, and you'd look at that project at the bottom end of the global cost curve when it comes to capital intensity, when it comes to operations. So we're really excited about that. That is a flagship for our company. We see that as a massive nation building opportunity for PNG, but it doesn't stop there. Because of its proximity to Australia, is a very, very large opportunity to ship the products down to the east coast of Australia.
And Paul, you do have 2 other projects. What can you tell us about power generation?
Our power generation project is ready to go. We're waiting on the Papua New Guinea government to approve our power purchase agreement. That's a 25-year arrangement with the government. Their subsidiary PNG Power have requested us to submit a power purchase agreement, which has been done. All the approvals, definitive feasibility study, all the environmental approvals, all of that has been done, and it's simply waiting for a power purchase agreement to be signed by the government. I think the key for people to understand there about why this would be an attractive project, where it's displacing heavy fuel oil and diesel. That heavy fuel oil and diesel is far higher polluting, but also it's 2 to 3 times the price. So we're going to reduce the power price by more than half. You know, that is a huge opportunity for PNG. It's a great opportunity for the shareholders of Mayur.
Now to your strategy, what can you tell us about your multi-commodity approach? Because you do have a lot of projects on your hands.
We see 2 things. 1, you diversify your risk in a developing country, but also 2, as I've articulated in the interview, you have energy and you have industrial minerals that actually go hand in glove and can benefit each other. And we see some synergies between the projects.
And just quickly, what can you tell us about your share price?
We're valued at $100 million or thereabouts. If you then look at the projects that we've recently delivered, the Chinese deal values our economics at around 70 million Australian dollars. The lime and cement project that we've recently announced is also valued around 500 million. with the power and the copper gold, we've got an opportunity of around several $100 million of value. So we see the arbitrage between $100 and $700 million as something very attractive to shareholders, particularly based on how advanced our projects are. And then when you look at our share registry, we have Bennelong, we have Terra, we have Regal, we have Solpat that have bought into the vision that we've got. They've bought into our track record. They've also bought into the fact that we've put our own skin in the game. And when I say skin in the game, management and my family control 70% of the stock. So they know that we'll be trying our very best to accrete value for shareholders, the very best we can.
Thank you so much for your time, Paul Mulder.
Thank you.